Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Tuesday, March 14th, 2023. It's now the 13th. We start off in the S&P 500 daily chart in DeMark looking back to December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 3 count. And to negate that for end of day, there must be a close above 3992.01 for the price flip to the sell setup count 1. And this is the third day that price has closed underneath the channel 3 low. So that's getting near its limit. It can go up to 5, but that's an extreme. So 3 is about average. And things are getting mighty oversold. But that means nothing if there's a hot CPI report tomorrow morning at 8:30 Eastern Time. And if the inflation report is nice and cool, and inflation is still on a steady downwards trajectory, there could be a price spike up, and if it closes above this 50% and 100 momentum up, it will become qualified. And price is getting very close to the qualified and confirmed 50% exhaustion down for propulsion. So tag that and start moving downwards. It would probably slice through that down projection for the D wave, down wave 3. And then we're into the trend factors. So trend factor down 4, 37.41. And the one I'm watching is again this trend factor down 6, 35, 33.83. It looks like all roads lead to a retest of that bottom in October. I've turned lines back on, and this ongoing demand line for Tuesday is at 3800.97, and price would need to open below it and then close below it for end of day on Tuesday to become qualified. If it heads down, meaning price, and then subsequently closes underneath the demand line, it will become disqualified. And it's in close proximity to the 50% qualified and confirmed propulsion exhaustion down. So hopefully that acts as support instead of becoming qualified. And disqualified would be the best case scenario if price heads down in the morning, but if it's a bad CPI report, meaning inflation comes in hot, it will more than likely open underneath this ongoing demand line and possibly qualifying it for the end of day. Nailing this 50% qualified and confirmed propulsion exhaustion down and just keep heading down, and then we're at the mercy of trend factors. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. The confirmation process for this qualified 50% and 100% propulsion momentum down has started, as there was an open lower than this close on last week's bar, and price ticked lower than the low on last week's bar for the week of the 5th. Now it needs to close underneath this close for the week of the 5th at end of day Friday this week, and this level will become qualified and confirmed, qualifying and confirming this 50% propulsion exhaustion down. And you can see that that is near the 3530 area, along with this ongoing demand line, and the Bollinger Band, lower band is there too, and nail the qualified and confirmed propulsion exhaustion down for 50% and get through all that around that area, then it's more than likely headed down for a retest of the COVID crash of March 2020. The NASDAQ Composite new highs, new lows weekly chart shows the new highs, new lows line in the thumbnail has definitely rolled over and headed down. It hasn't made it down to this low where it turned up before. So that means the signal line will still move downwards, and the closer it gets to the black line here, new highs, new lows, this could turn around and then nail that signal line and get above it, and that would be the buy signal. Till then, there's going to be a whole ton of volatility, it looks like. The NASDAQ 100 high-low index shows the 5 EMA in blue chasing the red EMA 10 here, and the ROC 12 is at negative 8.70, headed up towards 0. So maybe we can get a crossover of the blue above the red right around 0, and that would be a buy signal for the NASDAQ 100. All the big fat cap megatechs, which that index doesn't have any banks in it. So the rotation is on out of the value and financial sectors, etc., into the sectors that are going to do well in a low interest rate and low dollar environment, and we all know where that's at, so we'll keep an eye on that. But the way it looks now, that it could make it above there right at 0 plus or minus 5, so positive 5, negative 5, and a crossover the blue above the red, and that's a buy signal. So wait to see what happens with the CPI report tomorrow, Tuesday at 8:30 Eastern Time, and that will tell you which direction this will be going. And the NDX high-low KSTs, you can see the short-term KST similar to the ROC 12. It's getting right near 0. It's at negative 9.15 and pointed up. It's above its signal line. The intermediate term KST is pulling back on the stick a little bit, and it's right at 0, just about 100.59, and the long-term KST is still pointed to upwards to the right here, so that is really in the nosebleed section there. But hey, if this financial thing really does collapse, and this is going to be the place to be. The CBOE total put-call ratio charts KST of the put-call ratio really did a turnaround. And I don't think it's broken, even though it went down as the S&P price went down. This is the options market betting on a Fed rate pause or even a cut, even after pricing the cut out not just a week ago. Now it's back in and even earlier. So there's some serious speculation going on there. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily horizontal support from 12/21/22, daily horizontal support from 01/26/21. The bottom of the cloud 26 bars back concerning the lagging line, along with the top of the cloud 26 bars back. To the immediate downside is the daily Bollinger Band. Trend factor down 3, the weekly baseline, the uptrend line from 09/24/2020, and the pivot point break below that. And there's this ongoing demand line which price must open below and close below for end of day today to become qualified. And S1 and my moving target, monthly support and resistance from 05/01/2007 to the upside is the daily channel 3 low, R1, the weekly channel 3 low, and the Fortress Fed resistance from 07/2022. And it looks like the sky's the limit above that, but right around 3930 area with the weekly Bollinger Band mid-band, daily conversion line, and the monthly 12 simple moving average get past that, then it's back up into the higher numbers in that zone. The New York traditional McClellan breath oscillator to get back to zero would require 5,732 advancers over decliners to get back to zero. Have a great day.